All right, let's talk about the big one. The question that's probably all over your search history. How do you actually make $1,000 a day trading? It's the dream, right? So let's get real about it.
I mean, that's the number, isn't it? $1,000 a day. It feels like the key to financial freedom. But, wanting it is easy. The real question, the one that stumps everybody, is how do you actually do it?
Okay, before we even get into the how-to, we have to hit the brakes and face a really tough stat, a sobering reality check. About 90% of traders lose money. Now, I'm not saying this to scare you off, not at all. It's about setting the stage. The dream is absolutely possible, but you've got to understand it's protected by some serious risk. So this changes everything, right? The real question isn't just, hey, can I make $1,000 a day? The real question is, do I have what it takes? Do you have the three pillars you absolutely need to build on? We're talking about capital, a solid strategy, and maybe the most important one, the discipline to actually follow the plan.
And that's exactly what this is all about. We're going to cut through all the hype, all the Instagram posts with rented cars, and give you the actual blueprint. No fluff, just the real actionable strategy that the pros use day in and day out.
All right, first things first, we have to start with the reality check, and that means talking about the capital equation. Honesty, this is the part most people skip, and it's why they fail.
And look, we don't need some supercomputer for this. It's just simple math. But I promise you, once you see these numbers, it's going to completely change how you think about your trading goals. So check this out. It makes things crystal clear. If you're trying to make $1,000 on a $10,000 account, you need to pull a 10% return in a single day. That's gambling. It's just not sustainable. But look at the difference with a $100,000 account. To make that same $1,000, you only need a 1% gain. See? That is a professional target. That's a goal you can actually build a career on.
And this right here, this is the huge mental shift. The amateur with a small account is basically forced to swing for the fences on every trade, taking on insane risk. But the pro with real capital is just focused on chipping away with small, consistent percentage wins. They're not chasing a dollar sign. They're executing a plan based on percentages. Okay, so if having a decent chunk of capital is the secret sauce, the obvious next question is, well, how do I get it? The good news is there are actually three very realistic paths you can take. First, you've got the large capital model. This is the straightforward path if you already have, say, $100K or more to work with. The second path, and this is a game changer for a lot of traders, is the funded account model. Basically, you prove you can trade by passing a test, and a prop firm hands you $100K, even $200K of their money to trade with. And third, there's the scaling model. This is the slow and steady marathon approach. You start with something smaller, like 5 or 10 grand, and you just patiently compound your wins over a year or two until you've built a sizable account yourself. Okay, so you've picked your path to getting the capital. Now what? You need a playbook. You need the actual mechanics of a professional strategy combined with some serious discipline. And listen, you don't need charts that look like a mess of lines with 100 indicators. A really solid strategy is often simple. We're talking about an intraday breakout strategy. We're operating on the 15-minute time frame. Our main tools? The 200 EMA, that's our North Star for the trend. Basic support and resistance levels, and volume. And the golden rule? We never ever take a trade unless the potential reward is at least double the risk. Now, when I say rules, I mean these are non-negotiable. Think of them as laws. Rule 1. For a buy, price has to be above that 200 EMA. No ifs, ands, or buts. Rule 2. We wait for a clear break of a resistance level with a big, confident candle. Rule 3. We need to see a volume spike to confirm that other traders are on board. And finally, Rule 4. If that risk-to-reward ratio isn't at least 1 to 2, we just don't click the button. We walk away and wait for the next setup. Pay close attention here, because this might be the most important part of this whole explainer. Your number one job as a trader is not making money, it's protecting the money you have. That means you only risk 1% of your capital on any single trade, max. You take at most 2 good trades a day. And you have a kill switch. You hit your target, you're done for the day. You take 2 losses in a row, you shut it down, walk away, end of story. I really want you to let this one sink in, because it's the entire game in a single sentence. Where you put your focus determines everything. The second you shift your brain from how much can I make to how much can I lose on this trade, that's the moment you start thinking like a professional.
And you can see the difference so clearly here, right? The beginner gets emotional after a loss and starts revenge trading, trying to force a win. The pro just marks it down as a business expense and moves on. The beginner goes all in with leverage, chasing a lottery ticket. The pro's main goal, above everything else, is to protect their capital so they can show up and fight again tomorrow.
All right, let's pull all of this together. We're at the final, and maybe the most critical reframe that you need to make if you want any shot at making it in this game long term.
Let me just be as direct as I possibly can with you. You are not going to make $1,000 a day when you start. It's not going to happen on day one. It's not going to happen in your first week. And honestly, probably not in your first month. And anyone who tells you differently is absolutely selling you a fantasy.
Here's what a realistic journey actually looks like. For the first few months, your only goal is to learn the process and execute your plan perfectly. Forget about the profit. Then, maybe around the 6-month mark, you start to find some consistency. But it's really in that 1 to 2 year window where consistent profitability starts to become a real, achievable goal. This is a marathon, not a sprint.
And this is the bottom line. This is the one thing you need to remember. Money is simply a byproduct of skill. If you chase the money, you'll get emotional, you'll break your rules, and you will lose. But if you focus, like obsessively focus, on building your skill, on executing your plan perfectly, the money just naturally follows.
So I want to leave you with this question to really think about. What are you actually doing here? Are you just chasing a number, a path that we know ends in failure for 90% of people? Or are you ready to commit to the process, to the grind of building a real professional skill? Ultimately, that choice is yours.